The theme for today is rejection. The indexes were rejected at key moving averages, and rejection is a part of life. You better get used to it. It's going to happen, and you're going to have to deal with it appropriately. And today, especially, well, in the stock market, you're going to get rejected a lot. And today, we just saw the Nasdaq, trade up to a moving average and then get rejected. Um, this has this hockey stick type of look to it, where it really sold off quickly and then took a long time to trade back up. This is a wedge, a bear wedge action, and then finally got rejected today. It didn't even make it up to the 200 simple moving average. But the Nasdaq, obviously down 372 points, more than 2% on the session. And here we go with the volume now. We had this short covering rally. People got excited about it. With the options expiration day on Friday, we had quite a bit of volume. But the subsequent days, Monday and Tuesday, were light volume. Now today, volume was above the options expiration volume. So there's some people who want out of this market. It doesn't matter who, but it's just a fact. These people want out, yeah, greater than the options expiration. So that's just telling you that there's a lot of sellers out there. And to me, I've got to go back 6 years to 2019 because if we're doing some precedent analysis here with this market, I believe the Nasdaq is running a similar um, time frame, a similar style, a similar pattern to 2019 when Powell was raising rates and Trump wanted lower rates, and they were, at loggerheads over what was the right thing to do. And we had this, quick, slicing of the 50, then a slicing of the 200, and then it made this low and it rallied up to the 200 and got rejected. So we know what rejection is like. We just saw some rejection today. So I'd say you are here, or we are here as we start this second leg down of the this three wave down pattern here. We had one, two, and then the ultimate third leg down with capitulation type volume. That's what you want to see. Like everybody who wants out is out. Like everybody's out. Like exhausted sellers, and then we could start rallying back higher. But until we get that, I don't think we're going any sustainable rally. And the reason why I say that is because there are zero leading growth stocks in this tape. Whenever you're in doubt about if a market is uptrending or we're starting a new rally, you look for leadership. And I look for some in the drug area and the cybersecurity stocks, but they just flattened out. There is no leadership in the growth stocks. So you can't have a sustained rally without leading growth stocks. But anyway, I'd say we're right here and we can expect, my expectation is, an undercut of the prior low. So let's go to take a look at this, right? Three waves down, and then take a look at today's tape, where we had this, for first slice of the 50, slice of the 200, rallied back up, and now here we are. And I think we undercut the 17,238. That would be my expectation here in the next few weeks. And until things get straightened out, there's way too much uncertainty. Powell kept saying uncertainty, uncertainty, uncertainty. And there is just way too much geopolitical noise for the market to figure out right now. So when in doubt, they get out. And that's the old Wall Street maxim. So you just got to play this thing one day at a time. And today we just saw the rejection. And that's the story of the day. Rejection, the SPY rejected. This is textbook. You got that same type of hockey stick look, right? Come straight down. Then it took a while for this, bear wedge to play out there. I mean, there's many, many sessions. This is weeks. And then finally hits the 200 and then boom, trades down more than 1% here. Now it closed right there at the 10 EMA, right? Which is yeah, right at the 10 EMA 568. So, I know I have some friends like, oh no, it's going to find support there and keep rallying. Well, it might. So, you got to always keep an open mind, be flexible. because it could just, bounce off that 10. But, take it one day at a time. Today it was down 1.19%. And if we look at the RSP, then we know, this is only down 0.19%. So the SPY was down 1% greater than the RSP. So this is the 493 stocks, not counting the Mag 7, that are doing much better. So that tells us what's driving this market lower today. It was stocks like Nvidia. I mentioned the death cross earlier, where the faster moving average, the 50 sliced below the 200, which is a longer term moving average. It's an indication of a downtrend. So if we do have this, second wave down, I would expect it to take out that 104.77. So, but in this market, it's tough to be long and it's tough to be short too. As you saw, the shorts got their faces ripped off the last couple of weeks here with this big rally. So, that's why a lot of people just go to cash and just wait it out, because it's not very pleasant having your face ripped off. Anyway, Nvidia was one of the leaders to the downside. Apple, this wedge action here, that looks like a good short play if you're into that kind of thing. Microsoft talked about canceling some projects here. So the AI and the data center play, I'm going to get to that at the end of the video here, because it's very important that not enough people are talking about. And I think they are in real trouble. Meta platform. This looks like the index, slicing all its moving averages. This one did hold at the 200 though, which is the big difference, but rally up and more rejection. Amazon, this one undercut the 200, rallied above it. Now we'll see if that can find support there. I doubt it. My expectation was, it's going to undercut these lows here, but that's just an expectation. Google, they know they need growth. They bought Wiz. At least they're making some sort of a, you know, um, attempt, at growth here. They're not as bad as some of the others, but uh, they've, it's way below the 200. Nothing good happens below the 200. So, yeah, these things are kind of out of sight, out of mind. Tesla, another one, rallied up to the 200 and then just got rejected today, down 5.5%. If you have a big position and you're down 5.5%, that hurts a lot. So that's why when the market's like this, you kind of like to keep your position smaller, because there is no edge here. There's no edge when your stock is below the 200. And we know that stocks that trade 50%, this is more than 50% off of its highs. Tried to explain this to a trading buddy last night. This is 488 and it traded down to 220. So this was more than 50% off its highs. And right now, even with the rally, um, it was up what, almost, it was more than 10%. It's still 44% off its highs. And we know that these stocks that correct more than 40%, one of them, they're more prone to fail. And secondly, they need time to form bases. So it's going to take time. It's not just going to be one of these V-shaped rallies where it just trades up to new highs. So Tesla to me looks pretty rough here. That looks like a textbook, a short play if you're into such things, as it rallied off the lows like 220 to 280. And then now, boom, it got smacked down at the 200 simple moving average. Anyway, I'm not interested really in the Mag 7. I do like having the indexes, at my back, some tailwinds as I trade. But I mentioned earlier, there's not, growth stocks leading us higher. So I just got to go to some defensive names. GE made a new high today and then pulled back sharply. Wow, that was down. It was up a couple percent and ended up down a couple percent. Yeah. So, yeah, I was watching it in the morning there. It looked pretty good. And then, yeah, then it got shot down there. Wow, that's not good. HWM, another defensive name. Yeah, down 2.6%. Yeah, just a rough tape. Even the defensive names are getting shot down. This is the ITA. This is the Aerospace and Defense Exchange Traded Fund. It was looked like, it looked pretty good here in this base. And then it sold off too and closed near the lows of the session, 10%. of the daily range. So man, this it's hard to escape, when the markets are selling off like this. They go to defensive names. That's why I started off with defense. And to try to hide, because they have to be invested. They try to hide somewhere in stocks. And so I'm just looking around here at where they're hiding. This is AR, oil and gas, looks pretty good. Double bottom base here. I made a new high and then pulled back down 1%. And man, let's see what this one looks like. Yeah, I looked at these early in the day and I kind of had stuff to do, and man, they just sold off. So, yeah, not much strength there, huh? Range resources. Yeah, these are all looking the same here. There's your double bottom, tries to, you know, show some strength in the morning, try to flex, and then sold off all day. Yikes. EXE, I do have this one on my ready list this week. At least it was flat. You can see it once again, this double bottom base. This thing still looks pretty good. There's your options expiration volume from last Friday, your quarterly options expiration. So not bad here. Not a nice little strong start and still, finished with a gain. So in this tape, that's fantastic. CRK. This is Comstock Resources, another oil and gas exploration stock in a double bottom base here. So this is something to watch. I know these aren't they're not going to move like Apple Oven or Supermicro or anything like that, but they're showing strength. They're set up in bases, and that's why I'm showing you these. And of course, the big kahuna is Chevron. This one's looking pretty darn good, making a new high today. And the other one, the big component of the XLE is ExxonMobil, and this one's still rounding the right side of the base here. That one looks pretty good as well. But I'm not interested in putting any more stocks on my ready list this week. There's just too much pain out there. It's too much. The market's just way too treacherous. So I'm going to move on here. We did the defense, we did oil, and then I've got to go to insurance. BOW, a thinly traded insurance name. Bowhead, not bonehead, bowhead. Made a new high. You can see it broke out of this base here, made a new high, and then pulled back today. And I imagine that's going to have the same profile. Yeah, up in the morning and then selling off. So just a tough tape, folks. Bro, you just got to be careful and protect your capital. This one was made a new high, I believe, today, 122.61, but I guess it finished flat or, up a third of a percent, which is fantastic in this market. But just another, defensive name, AON. These insurance stocks are full of defense. It's at that original, buy point there of 395.33. So that one looks pretty good after trading up to 412.97, pulling back to the 21 and finding support there. So that is okay, better than getting crushed 6 or 10%. This is PUK is what I'm looking for, not puke. Prudential, Hong Kong based, just looks pretty good. I'm not really interested, but looks just trying to show you some strength here in a really, really weak tape. And then, of course, Warren Buffett. Like I said, if you have to be invested, let's just go where Uncle Warren goes. Just pile into his stock. This one's making a new high again, which just shows you how defensive this market is. Like I say, as retail investors, we have an advantage. We can just get out, press a button, we're out. We could watch the carnage from the, sidelines and do the triage later. Or, the professional investors must be invested. They're managing billions of dollars, and so they hide in stuff like this. Because they take money out of the tech, the more growthier risk names, and they go into risk off stuff like Berkshire Hathaway or possibly even Ronald McDonald. Yeah, I think McDonald did okay. So that was up 2% today. So they pile into stuff like that. All right. One other one that I have to show you is KIE, and this is the um, insurance, spider, exchange traded fund set up with a cup with handle pattern here is flat on this session, which is great. If, your job is to not lose money, right? So that's kind of what either stay cash, get out or just play small or get into defensive stuff where it's not going to just, crush you 10% in a day. So anyway, that's my story and I'm sticking to it. I mentioned earlier about growth stocks. I had some, potential growth stocks for, maybe if we have this rally that can be sustained, maybe some of the cybersecurity names and drug names can kind of carry the day, but it just doesn't look that way here, folks. This is VeriSign. This is one that Buffett did buy. It was up nearly 1% today, so looking pretty decent. This is Okta. I do have it on my ready list this week, and it just can't sustain a move higher. Keeps pulling back to the 10, and there's nothing wrong with that. I mean, that's fantastic, right? A stock that continually, finds support at the 10. There's nothing wrong with that. It's just in this tape, you're not going to see, a ripper higher, right? As I say that, it's up 4% after hours. I don't know what's going on there. But anyway, you can see on the weekly chart, this is a long consolidation period, had 3 weeks tight going into this week, but right now it's at the kind of the lows of the weekly chart there. If I could zoom in one more time, 19%, yeah, daily, weekly range there on the Okta. CrowdStrike, another one I had high hopes for. It's up on the week 2.5%, but just tried to rally above its 50 and then got rejected, which is the theme for the day. So you got to expect stuff to get rejected in a tape where the Nasdaq is down, more than 2%. Rubric is another one I had hopes for that maybe could be a new leader and a growth stock leader, but just, down 7.5%. This is just a lot of pain. And it just can't sustain anything that goes up, it's just being sold. So profits are being taken. So just keep that in mind. If you have profits, if you don't sell it, you're probably going to lose it. And if you're holding, Rubric for longer term for a year, you don't like paying taxes, which I don't. And you want to hold for a year, then maybe this will be a big winner for you longer term. But for right now, it's just shorter term. It's just kind of a mess. And it's not, we can't have this sustained market rally without some of these things doing something. Checkpoint is another one in this group, and just once again, it just keeps pulling back to its moving averages. Nothing wrong with that. It's only down, 1% on a day where the Nasdaq was down more than 2%, but it just can't lead anything higher. And then the drug stocks, I had high hopes for drug stocks to lead us higher. Gilead, during the market correction, it was showing strength, making new highs, and then it corrected while the market rallied. And now today it was up while the market sold off. So Gilead maybe will lead us higher. The problem is, the geopolitical, BS out of Washington. Nobody knows what's going to happen with pharmaceutical tariffs. I don't know, you don't know, nobody knows. And so when people are uncertain, when in doubt, they get out. Amgen, another one. This is a good American company out of San Diego, but they're just gonna, when in doubt, get out. So it's going to be really tough. Some of the European drugs, that I had hopes for, just selling off. These are some of the larger ones. GlaxoSmithKline, that's Novartis. GlaxoSmithKline selling off. As soon as the mention of tariffs came, these things sold off. So AstraZeneca is another one. Yeah, just this is brutal. And so if the big cap can't take us higher, then you look towards, some of the smaller names. This is a Halozyme, less than an 8 billion market cap. Looks pretty good here. If I go to the weekly chart, consolidating in a base when they run up this quickly off their lows, you got to expect some sellers here, some profit taking, so some sideways action. So this isn't bad, only down 2% this week. So I still have hopes for this one, Halozyme, AXSM. They just reported earlier in the week and sold off down to the 50. That's not bad though. Only down 1% today. Yeah, that looks okay. Down 6% for the week. Not ideal, but and then TG Therapeutics is another one, pulled back to its 10 today. I guess above 40 looks pretty good. The market is just so brutal. On the weekly, you can see three hammer candles here in a row. So this thing is due to give some back here, especially in this tape. It had hammer one, 27%. That was the earnings week. Then the following week, 6.2% gain. Last week, nice hammer, closed at the highs. 96% of the weekly range, a 5% move, and now this week only giving back 5%. That's not bad after a big move like that from the low of 30 up to 43 and now down to 40. So that's respectable, 5.8% off of its high. So we'll see what happens with TG as the weeks and months pass by. But do believe they're taking market share and could be one of the big winners. It's going to take time for this story to play out. All right. Anyway, that's it for me. Thank you for watching, except for MC Stock Charts. We always have one more thing in honor of the great Steve Jobs and Peter Falk, who one of our subscribers had a nice interview with Peter Falk, Columbo, who is the unassuming detective who would say one more thing. And that is January 27th. Not enough people are talking about this because I believe, you've heard that song, The Day the Music Died. This is the day AI and data centers died. NVIDIA down, this is a deep seek, whack day down 17%. A, a $3 trillion at the time company down 17%. That is a whack job. Yeah, it rallied back up, but then just sold off. And you can kind of see here with NVIDIA, you got this, double top here, and then the sell off. And of course, I mentioned the death cross. This thing is just in a downtrend. When you see these moving averages, shorter term moving averages curling lower, this is not looking good for NVIDIA. But that one is holding up better than some others because we had the data center play, Vertiv Holdings. This is Dave Cody's company, made that high of 155, looking good, going to the moon, right? On the 24th, and you come in Monday, the 27th, and you're down 30%. A company down 30% in one day. It is adios, muchachos, man. It sliced its 10, it's 21, it's 50, all the way down to the 200 in one day. From new high to the 200 in one day. Yeah, it rallied up. Took forever for it to rally up to the 50. Then it got rejected. That's the theme of the day, rejection, baby. And it didn't handle the rejection very well. Made a new low, rallied up to 200, made a new low. Then it had this like hockey stick type of rally, took forever. And then boom, this thing got slammed today on a downgrade, 11%. This is just total pain. And when you get that rejection there on that 27th, man, you got to take notice. It's a shot across the bow. And I still see people, saying, the NVIDIA and, the Vistra and Vertiv. I mean, they're done. They're gone. Let them go. Say goodbye to a hero. This is a stage 4 decline. Vistra, same thing. I mean, it was down 28% in a day. 29%. Get out of town. That's just way too much pain. CEG, another one, Constellation. You hear the TV evangelist Kramer talking about this one. Just give it a rest. Down 21% in a day. Yeah, I mean, you're going to get people killed like that. Now it's below the 200. I didn't mention that the Nasdaq has been below the 200 the entire month of March, and that's the way the bear market starts. The big bear, and then Broadcom. I had high hopes for Broadcom as well. CEO singing a big tune, but that day, the 27th, sliced its 50. It was only down 17% in a day. A company this big down 17%. Tried to rally. The bulls come in, step on the gas. Tried to get the thing going, but man, slammed down to the 200 now today, rejected below the 200, loser. So you're done, Broadcom. And like I said, when you see stuff like this, I mean, this is a stage 4 decline. It had this stage 1, area where it just kind of based and had stage 2 where it made this advance, and stage 3 where it stopped, going higher, and then stage 4 where it's just adios muchachos, it's taking the elevator down, and we don't want to be on that ride lower. So anyway, yeah, maybe it'll, stop and form a base, maybe around $50 and start another, ascension higher. But this thing's got time, 48% off of its 52-week high. Anyway, that's it for me. There's a lot of them that looks like this. I think you get the point, though. January 27th was the day the music died for the artificial intelligence and data center stocks. Microsoft kind of confirmed it for me today. They're canceling projects. This story is over. You could sit there and say the fundamentals look great and they're gonna be having this great earnings and sales. It doesn't matter. The technical picture is telling you the story. This is the Nasdaq. I just wanted to point out, that since March, this entire month, The index has been below its 200. It started on this day right here, I believe March 3rd. Yeah. Yeah, February 28th, March 3rd, below the 200, below. Every session has been below the 200. Made that low, rallied up, and then got rejected. I just think it's going to come down to that. At least retest that low of 17,230. That would be my expectation. But expectations can be broken, and maybe this thing just rips higher. Got to stay flexible, got to have an open mind, and you got to stay positive as well. Keep your heads up, keep your chin up. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.